Earnings after the closing bell. So what parts of Google's parent company should investors be focusing on? Joining us now to talk about that is Max Wolff, Chief Economist at Manhattan Venture Partners. Max, it is good to see you this morning. What would you single out as the most important point investors should keep an eye on when Alphabet reports earnings?
So great to be here. We're going to be looking at that we get informal one in the call, and we're going to be really interested to see how quickly YouTube is growing. We're expected to grow north of 25%, maybe upwards by 50. That's a big story. We also expect there to be some deceleration in desktop advertising because there continues to be, and we always want to see this sort of relationship between how many more digital ads can you serve because the price always falls. So we do expect growth. We expect meaningful growth, but we expect a little bit of clarity on how, for the first time ever maybe, some of the moonshot programs are doing. How's the self-driving car? How's the internet based in hot air balloons orbiting at a high altitude? How are some of the sustainable energy programs? What's going on inside the X Labs, which is the stuff of science fiction, but increasingly the stuff of next year's revenue?
Yeah, there's definitely a lot going on at Alphabet, but let's focus in on ad, which you touched on. Google's world ad revenue growth could be dropping into the single digits after years of double-digit growth. How much should investors be concerned about that?
Well, they should be concerned only to the extent that Google can't monetize the other things it's doing. We kind of know that Google is the king of search. Still probably gets about $3 in web advertising, so a behemoth there. But we are a little bit worried that they won't have the next new thing online running up as quickly as this runs off. We know that Chrome has been big for them, mobile Chrome. I think they just announced 1 billion mobile Chrome users around the world on a monthly basis. We know that Android is about 70% market share, and that we got about 1.4 billion Android devices. As long as they can ship those many devices and they can still serve ads, we're okay, but we still want to know what about the car, what about virtual reality. Last area, virtual reality and cloud computing are huge. We expect huge growth. Any disappointment in those areas would cause real worry.
Would you say then that virtual reality is Google's most important venture going forward in terms of offsetting the decline in growth that we're seeing in advertising?
So I think cloud, AI, and virtual reality are the big two. By the way, I think they're the big two for everybody. I think the era of the smartphone is mostly behind us, and the era of the messaging system, the chatbot, and virtual reality is here. They need to be front and center. They show evidence they are. If that is in any way not the case, that would be a big worry.
Last question. Do you think Google should buy Yahoo's assets?
I don't think they will. I think I think we're watching Google too, and we'll be interesting if we get color there. Have some regulatory headwinds once again in Europe, and probably trying to buy one of your major competitors in the search category. If everyone's accusing you of being a search monopoly, is poor timing and probably not a great idea.
Good point. We'll see what happens there. Max, thanks so much for your time, and for all of you watching, thank you. I'm Seema Modi.